Solana token has witnessed a dramatic price surge that has surprised investors. The token was previously in a severe downtrend due to rising meme coin controversies and declining investor interest. However, today is a different story. The price surged massively amid Donald Trump's U.S. strategic crypto reserve announcement involving Sol. As a result, the price surged over 15% within a few minutes and turned into a massive uptrend. But there's more. Let's discuss this. Bitcoin has always been considered the ideal digital currency for crypto reserves. However, Donald Trump's news includes top altcoins like Solana and signals that the government is considering broader market adoption. Interestingly, this move provided the most significant support for these chosen altcoins. As a result, the Solana price surged 15% within a few minutes. Before the announcement, it was trading at around $143, but within a few minutes, it hit a high of $177. Although it did not stay at the same peak, currently trades at $160. However, investor interest remains persistent. After a 410% surge, its 24-hour trading volume is $13.25 billion, showing high confidence among holders. Additionally, its exchange activity surged, growing from $5 million SOL to $12 million SOL within an hour of news. Interestingly, the Solana derivative market clearly reflects this newfound optimism, with open interest surging 30%. The long/short ratio on Binance and OKX shows bullish sentiment, with top traders favoring long positions. The investor needed this sudden SOL price surge as the asset had lost 50% of its value since its ADH, which was set just a month ago. The token crashed due to a global market correction and backlash over rising meme coin scams, like Libra and others. However, the sudden surge wasn't beneficial for all. Short traders faced heavy losses, with the liquidation revealing that $72 million in wrecked positions were recorded. Of these, $38.29 million came from short. Interestingly, this also favored the rally as traders rushed to cover their positions. After a 15% rally, investors now await a further uptrend to cover the month-long losses, as the ADH stands 44% away from the current level. However, the barriers to the Solana price rally still exist with the ongoing meme coin frenzy, institutional hesitancy, and the recent SOL token unlock. The token requires the continuity of the bullish momentum despite the macroeconomic uncertainty and increasing liquidity with token unlocks. Some analysts do believe in this token's potential to rally amid the Solana-based future contract by CME Group and Solana ETF approval. Further clarity on the U.S. strategic crypto reserve, whale activity, and liquidity flow can mediate the recovery. Investors must closely monitor this altcoin to understand upcoming rallies and price performance better. Solana price grew significantly after Donald Trump announced the crypto reserve news. However, there's a long way to go, so that various factors would support it. Market demand, high trading volume, and technical aspects are necessary for the SOL token to perform bullishly. Investors must watch for further updates on the U.S. strategic crypto reserve, Solana futures, and ETF approval to witness a comeback. What is Solana? Solana is an open-source blockchain platform created in 2017 by former Qualcomm executive Anatoly Yakovenko. The primary objective of Solana is to significantly enhance the scalability of blockchain technology, exceeding the performance of popular blockchains while keeping costs low. This is achieved through a hybrid model that allows the Solana network to theoretically process over 710,000 transactions per second, TPS, without the need for additional scaling solutions. Solana's blockchain architecture is designed to facilitate the creation of smart contracts and decentralized apps. It supports a wide range of decentralized finance platforms and non-fungible token marketplaces, making it a versatile solution for various use cases. The Solana blockchain was introduced during the 2017 initial coin offering boom, with the main network officially launched in 2020 after multiple phases of testnet releases. Unlike Ethereum, which focuses on scaling using multiple blockchain layers, the Solana blockchain attempts to provide a scalable blockchain network using only one layer. The idea is that a smaller number of powerful and fast computers maintain the network and can store the large amounts of data that it creates. The native cryptocurrency of the Solana network is SOL. It serves as a means of transferring value and securing the blockchain through staking. Launched in March 2020, SOL has rapidly climbed the ranks to become one of the top 10 cryptocurrencies by market capitalization. How does Solana work? Understanding how Solana operates requires a deep dive into its unique approach to consensus mechanisms, particularly proof of history and proof of stake. But essentially, at the heart of Solana's protocol is proof of history, providing a digital record of events occurring on the network at any given time. This can be visualized as a cryptographic clock, assigning timestamps to each transaction on the network, supported by a simple data structure. Proof of history works in conjunction with proof of stake to aid Solana in reaching a consensus, keeping the network secure, operational, and validating transactions. All nodes on the Solana network are equipped with these cryptographic clocks, ensuring the efficient tracking of events and eliminating the need to wait for other validators to verify transactions. This is a significant factor contributing to Solana's high throughput and fast block creation time. Who are the founders of Solana? History of Solana. Solana was built by Solana Labs, which was founded in San Francisco in 2017 by a team of software engineers with Anatoly Yakovenko at the helm. Yakovenko, along with several other members of the Solana team, spent many years working at the Fortune 500 company Qualcomm, which provides semiconductors, software, and wireless technology services for mobile phones. Qualcomm is based in San Diego, just slightly south of California's Solana Beach, which inspired the name of the crypto project. Though initially uninterested in cryptocurrency, Yakovenko had the idea to improve upon blockchain efficiency with proof of history during a caffeine-induced fever dream. He teamed up with Qualcomm colleague Greg Fitzgerald to work on the project, who is now Solana's principal engineer. Solana released its white paper and internal testnet in February 2018, while Solana mainnet and the SOL token launched in 2020. What makes Solana unique? Solana's focus on user experience is a significant aspect of its appeal, particularly in how it addresses some of the common pain points experienced in blockchain and cryptocurrency adoption. Another unique aspect of Solana is its approach to scalability, achieving high throughput without relying on Layer 2 solutions. In typical decentralized blockchains, the process of handling an increasing number of transactions often leads to slower performance due to timing differences between nodes in the network. Solana, however, tackles this issue differently. Its POS mechanism selects a single leader node, responsible for organizing and sequencing the transactions between various nodes. This approach streamlines the process, reducing the overall burden on the network and enabling faster transactions. Despite its advantages, Solana is not without its share of challenges. It is still vulnerable to tend towards centralization due to the relatively high computing resources required to become a Solana validator. What gives Solana value? The value of the Solana network comes from the 8 core innovations listed above, which allow the network to outperform most other blockchains and provide a scalable environment for global businesses to deploy crypto apps. The value of Solana's native SOL cryptocurrency is derived from its utility. SOL can be used to secure the network through staking, either as a validator node or a delegator. This is a profitable choice for SOL holders as stackers receive half of the transaction fees and most of the emission of new tokens. SOL is also useful to developers and users of crypto apps within the Solana ecosystem, as it is required to pay transaction fees. As the Solana ecosystem grows and the blockchain processes more transactions, SOL will become more